The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with us today. And good morning to our friends in Australia. Good afternoon to those of you in New Zealand. Got a good turn up today, Mr. Deck. Hello, and well to you, my friend. And Norbert. Hello, Norbert. Can you hear me all right? Just type in the question. The sound is great. Yes, Deck says, Norbert says, great. Okay, so we're working from Deck's in UK and Norbert's in either the Western United States or Canada. Not quite sure. Hello, Alan. You're with us too. Portland, Oregon. That's it. Okay, folks, great to have you with us. It'll be a really slightly different webinar today, so don't leave early. You're going to see some good stuff. Adrian's with us. Adrian, welcome. Adrian's going to be starting a tutorial in about 2 weeks from now. And this is going to intrigue you, Adrian, because you're going to get a little sneak peek at what you can learn in a tutorial. Alan Keen's with us. Alan, great. About time we had another talk, mate. He's a tutorial guy. So's Alan Varian, who's with us. And of course, as always, I thank Alan for directing me to Mudgee Bar and Talai when we move back to Australia. Alan, thank you very much. Albert, good to have you with us. This is something you questioned me about. We're going to talk a lot about time signals today. Alex is with us. Boyd, of course, in Canada wouldn't be a tutorial without Boyd. Boyd's a retired money manager. Very good operator that has been with the Daniel Code for a long time and visited me in New Zealand. He's actually doing something else in New Zealand, but we had a chance to say hello and break bread together, met Boyd and his wife. And Boyd's a guy with an immense sense of humour. And he sends me little, memes, I think you'd call them, or little interesting, amusing clips that I don't myself have time to go and find. He keeps us amused, which is great. Chase, who's my smoking nemesis. Chase, I'm about to do the deed fairly shortly. Daryl in Mossman, good to have you with us, mate. Dan up in Canada, terrific. Eric, of course, is a tutorial guy. Hank, they're the number of tutorials. Hank and his son, they should both be with us. Johnny Barnes, he's another tutorial guy up in Canada. Justin, good to have you with us, Justin. Let's see who else we've got. Mark's a gun trader. Mark's going to be Mark L in Ohio, I think it is, Mark. Going to be one of our outstanding traders, just in the process of wrapping up a tutorial. Lovely Marilyn's with us from Cleveland in Queensland. Marilyn, great to have you with us. Marilyn's in the process of doing her tutorial and got to the stage of doing her teaching on time last week, so I think she should be pretty excited. Mike Pell's with it. He's a tutorial guy from New Zealand. Mike Murphy's another one. Mike, we're going to get together next week and continue your teaching, your training. Okay, lots of people, including Nicole Kidman, eh? Well, not my favourite actress, I can tell you, but at least she's an Aussie, so I guess she got something going for her. Pierre, good to have you with us. Two Pierres. One of them is in the middle of doing a tutorial, Pierre. You got to Las Vegas. Shoot me an email when you're ready and we'll do some more work with you. My mate Rob H from New Zealand, very, very astute analyst. Rob is one of the tops. And Tom over in Florida. Tom's a wealth manager. I described him and his partner, the previous tutorial, as being brokers, and got an email, Tom, from your partner saying, not brokers, we're wealth managers. And I love the sound of that. Toddy Timmons over there. Hello, old mate. He's a great one. And Vicky's with us. Vicky, welcome. We don't get enough ladies to these events, so we're always very, very happy to have ladies with us and particularly say hello to them. And Bill, William Ford. Bill's been with us for a long, long time. Okay, that's great. Let's move forward, folks. The tutorial today, make sure I've ticked all the buttons. You can see my screen. We're recording. That's all good. I'm not sure how much of this recording I'm going to post. So pay attention. Some of it gets a bit detailed, but I think it'll sort of kind of knock your socks off. I've called this webinar The Darling Buds of May, and what prompted me is the old saying for stock markets, sell in May and go away, come back in September. And like all of these sort of old sayings about markets, there's some rationale to it, and traditionally May to September has been a negative time for stock markets, at least on a relative basis. Now, don't forget that while we don't trade stocks, what we do trade is derivatives of stocks. So if you're trading the S&P, it's the derivative, but it's based on the price of the 500 stocks that are in the S&P index. Same with the Nasdaq, same with the Dow. So we're interested in that saying, and of course there are other ones of May. The Darling Buds of May, in fact, refers to a book, a very funny book, and a television show. It's very old now, but it was fun. It was a great show, very, very popular in England. So let's move on. For those of you who are new to us, Daniel codes are a set of proprietary ratios that control time and price in all markets. And what most of you know is price. And make sure the screen is changing so you're looking at what I'm looking at. Seems the system's working. And this is a slide you've been shown before. Trading time is just the hottest, best form of trading you can possibly imagine. Now, there's a fair bit of controversy about trading time. Most of it has been caused by people claiming that they are going to be aware of events in the future, of time cycles that will make markets turn. And that's been largely discredited. And we do that to an extent with our fourth seal analysis. But if you take the time to read that analysis, you'll see we're very circumspect about it. And what we say is basically that these time cycles, the Daniel Code time cycles, which have been hugely successful, that's how I forecast the 2009 low to a couple of ticks and many others as well. We say that they're simply support and resistance on another plane. We have, if you look at your chart, your up and down axis, that's the price axis, it's called the first degree. I call it the first seal. You can use the word degree or seal if you like. I like to use the expression seal the way it's used in Revelations, that documents are sealed and you're not aware of them until the seal is broken and they're revealed. And that's sort of how the fourth degree bursts out at you. So the x-axis or price is the first degree. The y-axis or time along the bottom of your chart, that's the second degree. And volume is the third degree. Used to be a very important indicator for us. We don't use it much now because there's so much off-market trading in our various things we trade. There's physical trading, there's options, there's off-market transactions, there's dark pools where we don't see what's happening. So it's become less important. And then the fourth degree is an angle, and an angle has both elements of time and of price. And we call that the fourth seal. Basically, Daniel Code time trading on daily charts comes from taking the basic Daniel Code time cycles that we use on 6-day, 12-day, 24-day charts and converting them to fractals of them to work on daily charts. And it's quite extraordinary. I've shown you this slide before. And what I've said is 3 of our current video tutorials. Mark's with us, he's one of them. Produced better than 30,000 net return in paper trading natural gas. Now, another one who's with us today, Norbert, in the middle of doing his tutorial, says, wow, I can't get those figures. Well, what I teach you can be applied differently, and it depends on your risk appetite. You can get some truly amazing figures, trading time, quite extraordinary stuff. So it's good to have Mark here with us today, who's doing this and has one of the ones who's done it. We also have Norbert, who said, "Gee, that's a bit intimidating. I can't get those results." Well, he's using a different risk parameter, so don't be concerned about that. And you may want to trade Daniel Code price and time in a different way. But either way, it's pretty fantastic. I know Norbert, who's trading a much more conservative pattern in his paper trading, is talking about 300% on margin. Whereas if you open up your risk parameter, you can get the sort of figures that we've shown you up here, with the limitation, of course, that that's paper trading, and that has real limitations on it, but it simply indicates the potential available. You'll see all this will tie together in a while. And I'm re-showing you Needham's Heresy. I don't know why there aren't more people trading futures. And one of the great events of my life, which is a long life, it's had many twists and turns. I've been a practicing attorney for, 50 years now. Less practice these days, of course, but had my own law firm. I worked for other law firms. I've been director of public companies. I've been a thoroughbred horse breeder and trained my own race horses. I've had all sorts of things happen in my life, but finding futures trading and how much money you can make from it is one of the great events of my life. And I try to share that with people, and I don't get a huge response. The world is brainwashed by trading stocks and shares. And the other element that has a huge push to do it is options trading. I mean, trading stocks and shares, honestly, is for, I don't know, people who are happy to have very small price movements, and, you know, you've got to rely on a whole lot of leverage to get much out of it. And that's why the leading hedge funds, Tom T, who's with us, you'll be an expert on this, being a money manager, Tom. The leading hedge funds can't average, more than 5 or 6% a year. And we do better than that in 1 month. Sometimes a lot better than that in 1 month. So I really do want to, try and spread the gospel, and I urge all of you with me today to try and spread the gospel as well, that futures trading is the most rewarding form of activity that, legal anyway, or that you can do standing up, as they say. The thing about futures trading is it appears to people to be complex, and it appears to be complex for a number of reasons. First of all, there's a huge, vast amount of background knowledge that you need to absorb, and it comes from things such as you look at the main exchange, the Chicago Mercantile Exchange, the main futures exchange. It's merged with lots of mergers. The one I want to talk about is CBOT, the Chicago Board of Trade. They were the two dominant futures markets, and when they merged, a lot of the old habits from CBOT came across to the CME. So when you look at a CBOT chart, the grains, you look at T-bonds, they have a different pricing system. They quote their prices in carats. And a carat is that little arrowhead you see in prices if you're looking at a bonds chart. And behind the carat, it can be 2460, in other words, it's running in quarters, or it can be in 30 seconds, as it does in T-bonds. So you need to know all that stuff. The more modern markets, or a more modern approach in the CME, they use decimals. But when you go to look at decimals in markets, some markets have 1 decimal, some 2. When you get into futures, you have up to 4 decimals. So there's this sort of background knowledge you need to absorb before you can even understand the language. And from then on, you need to learn how to trade. and the basic form of trading is trading price. And that's mainly what you see at the Daniel Code website. But trading time is the most extraordinary, rewarding endeavor that I know. And price signals alone are ambiguous. Those of you who are trading price will know that better than anyone. But the Daniel Code numbers bring certainty, and they're quite extraordinary. And I know that for many of you, you don't use them, and you don't use them enough. You either don't get them at all because you're not subscribed to one of our programs, or if you are, you're not putting them on your charts. And I'm going to show you today that is complete heresy. The Daniel Code brings you something that no other program brings you. It gives you certainty of price. And then when you add that to time signals, I'm going to take you through that today and give you a bit of an introduction to trading time. And you should be jumping out of your chairs after this because you simply will not believe how efficient it is. For our trading, it's really basic. As many of you know, I'm an attorney, but I'm now an elderly attorney. My wife doesn't like me saying that. I feel young and youthful and get into all the sorts of troubles that young men get into. I certainly try to. My favorite saying to people is be as bad as you can. But I don't have much technical nous, and I don't have much interest in technology. I have a very smart young guy who works for us, Terry. He runs our support basis, runs the website. Some of you will know him or have had contact with him. He's a Canadian chap. But with me, basically, I press the button. If it doesn't work, that's it. That's the extent of my knowledge. So the way I've designed all of the Daniel Code trading systems is to trade off daily bars. Now, you can run this down to shorter time frames. It all works exactly the same, but I never have. And I spent many years sitting up all night. Remember, I'm in the Southern Hemisphere, so the main trading time is actually my night time. I spent many years sitting up all night looking at charts of very small time frames, daily, trading tick charts, any sort of intraday trading. I've done it. The reality is you actually make more money trading off daily bars than anything else, Tom, and I know that's probably heresy to your partner who loves to be a big-time intraday trader, but reality is you make more money trading daily bars. And you do it with no stress. We don't need live data for our sort of trading. You just need end-of-day data. It's cheap, efficient, stress-free. You spend, after you've learned how to do this stuff, you spend less than an hour in the morning doing your analysis, working out your orders. You put your orders on and go away. Go and play golf. Go and, go for a drive. Go for a walk with your dogs. Take your wife for a picnic. Anything you like. Just get away from looking at the charts. You don't have to live the life of being bound to charts when you trade the Daniel Code. And if it makes plenty of money, which not only can I assure you it does, but we have lots of people who've done tutorials who can assure you it does, it's the ultimate lifestyle. Enough money to fill your needs and your wants, and it's certainly marvelous. We're going to move on to a lot of work on charts today as I start to show you a bit of this stuff, but just so you know, if you haven't done it already, you're most welcome to have a free trial. Just go to the Daniel Code website, www.thedanielcode.com. Click on the free trial link and follow the prompts. Any issues, contact Terry at support@thedanielcode.com, and he will assist you. If you haven't already had a free trial to Trade Navigator, we're happy to arrange a 31-day free trial of their charts and software for you as well. Now, for those of you who haven't really embarked on trading, I beg of you, don't be afraid. Two of the very best traders we've got never saw a chart of any sort before they came to me. And some of the people that are doing tutorials now and recently who've been traders thought they were doing sort of okay. They can't believe how well they're doing now. So there's the contact points. If any of you interested in tutorials, email me, jneedham@thedanielcode.com. Since I guess for about the last 14 months, we've been doing video tutorials. Marilyn's doing one now, so is Norbert, so is a few of these people. And they're fantastic. The ability to record everything and you get all of your sessions back to you on video, so you can go through them as often as you like. And of course, you can ask me questions anytime you like. Okay, here's the compliance statement I'd like to show you. Trading all derivatives is risky. And if you don't know what you're doing, which is 99% of the trading population, it's very risky indeed. Now, let's move on and look at the charts. One of the issues today is going to be what these equity markets are doing. But we've got a few other things to get to before then. And here's the first thing I wanted to show you. Jerry rang me the other day to say, oh, one of your students has won the Robbins World Cup. For those of you that don't know, this is called the World Cup Trading Championships. It's a promotion put on by Robbins Trading, who are big brokers in the US. It's been going for a long time. It's produced some exceptionally good traders. And in here, this is the 2016 year results I'm showing you. Those are finished. And if you look under the list of the futures trading, you'll see number 3 on the list is Timothy Birch. And Tim Birch is a Daniel Code student. He came to the tutorial at Waiheke Island in 2014. A lot of you will have met him there. And Tim's also a director of Trade Navigator and their chief programmer. He's in charge of all of the technical side of Trade Navigator. Done a lot of work for us, a lot of our programs. Tim's had considerable input into. He's the most delightful guy. Brought his wife with him, came down to New Zealand, did the tutorial. Had a wander around New Zealand, then back to Australia, had another week or so in Australia. Talking to Tim when he came down the tutorial, he was very, very interested in trading. He was only trading a very small account. He's a tech guy, so he'd invented some of his own ideas, but he was just an average part-time trader. So he did the Daniel Code tutorial, went away, lo and behold, next we hear of him, he's competing in the World Cup Championship and came third. So congratulations to Tim. It was great. All your people that know you and met you in New Zealand will be really happy for your success. And you can see Tim had a return of 150%. The winner, a Russian gentleman called Arta, had 914%. So if Tim had come to another tutorial or two, he could have won it. And that's the difference. But anyway, he's done very, very well. 150% net returns, more than respectable. Remember, the trading in competitions like the Robbins World Cup and other competitions is a different sort of trading. You use much tighter stops, much tighter risk management, all of which I teach you at the tutorial. So well done, Tim. We're really thrilled for you and congratulations. That's great to see. All right, let's move on and let's have a look at the charts. Now, the first chart I want to show you is oil. And this is a question from you, Tom. As I told you, Tom is a partner in a wealth management firm based in New York, and Tom is based in Florida. He runs the Florida operation. And, excuse me, I guess as wealth managers, what they're doing is they're advising their clients on how to invest their money and hopefully, as well as that, how to make money. And this is a chart of oil. This is the June contract in oil, which is the current front month in crude oil. And Tom's interest was piqued by my comment posted on the front page of the website, which said that the time sell signal in oil for Monday, May the 1st, was doing very well for us. And it's made some part of $4,460, just depending where you close the trade. But let's have a look at this now. I know, Albert, you were asked a question the other day about trading time signals, and what you said is, where are the blue lines and the red lines? And what I've done here is I'm showing you the time signals, and I've also shown you in this chart the blue lines. Now, this is a different computer to the one that does the members chart. So some of these numbers may be slightly different, but very, very small differences, if any. And I want to show you, Tom, how time signals work. Time signals are created simply by the Daniel code time cycles reduced from their 6, 12, 24-day setups to trading on daily charts. And you can see here, I've just put on some of the bigger moves to show you. The money you can make is quite immense. Let's go back and start this. This starts in February the 21st, 2017. Now remember, this wasn't the front month at that time, but I put it all on the front month, otherwise I'd be flipping charts away. And it's exactly the same. On that day, there was a Daniel code time sell signal for tomorrow. In other words, one of the minor time signals had expired and it gave us a sell signal. Now, of themselves, these signals are the same as our TO3 and plus signals on the website. That is their conditional signals, and they don't mean anything unless they are elected. Big point to remember, since we've been had a public website, which is from 2008, so 9 years now, we've had 2 complaints about what we do. One of them was from a guy who got terribly excited and was trading someone else's money, didn't take the time to read the manual or learn how to trade, and he was selling on limit and buying on limit. In other words, if this, you can see here where this market is going down, he saw a blue line number here at 51.20. He would be buying that market on limit. That is below where the market was at the time, and that's fatal. The trading we do is when we have everything set up, we have a time signal, or we have a price signal, we have other things that are not on this chart to define those signals. This is an entirely rules-based system. There's no maybe or if and that. All the signals either are or are not. In other words, it all gives you a light switch solution. The signal is either on or it's off. And if it's on, as it was for the next day, this is Tuesday, February 21st, we had a time sell signal for the next day. For it to become valid, it has to be what we call elected. And that means it has to take out the true low of the setup bar. So Tuesday, February the 21st is the setup bar. And then it has to take that out. Just hold a minute, please, for me for 1 second, folks. Sorry, folks. So that once we say we have a trade, we've qualified the trade either as a price trade or a time trade or both, the signal then has to be elected. It's only a conditional order until it's elected. And trades get elected at or a bit below the true high or the true low of the setup bar. So the low of this particular bar on 0221 is 54.51. That means we'd be a seller at 54.49. We use a 2-tick buffer, but make sure you know what the true high and the true low is. There is a difference between the chart high, the chart low, and true high, true low. So 2 days later, you can see this trade was elected the next day, and then you had this little 1-bar counter trend on Thursday, February 23rd, and you can see that the chart low, if you just look at the gray bar, this bar just immediately above the chart. That's the information bar, and you can see there that the chart low is 54.42, but that's not the true low. Okay, so make sure you understand the difference between a true low and a chart low, and a true high and a chart high. So in any event, that signal was elected. There's a little buy signal here into the counter trend, and then you got this 2-bar rally, 3 bars if you count the bar in red, which is the inside bar. And where did it go to? Well, we have what we call the Daniel Code retracement levels, which you learn about when you start the tutorials, or you can just grab it straight off the Daniel Code tools when you subscribe to our plus signals. And look where this bar went to. The high of this bar is 54.68 against the Daniel Code retracement at 54.70. That's a variance of 2 ticks. And look at the number that it went to. It didn't hit any of the normal Daniel Code retracements. It hit one that in your tool is in there, but it's not activated because this is not a number that markets usually hit. This is what I call the NFI number. N stands for no, and I stands for idea, and for F you can put in any word you like, and most of you will probably get it right the first time. The reason that markets switch off the normal Daniel Code retracements and go on to this one, 62.5, is because markets are obsessed and besotted with Fibonacci numbers, and the closest Fibonacci number is 61.8. Market makers will often try, when they don't know what's happening, they're not convinced of the move, they will try to put the market at 61.8. They will usually miss it and hit 62.5. When you see a 62.5% retracement on a chart, immediately say that's the NFI number. It is almost certainly a fake. And that's a little bit of interest for you. If you see anything that looks close to a Fibonacci number, if it's not a Daniel Code number, it's a fake. Excuse me. There was a little 2-bar rally into a fake Daniel Code number. It's a valid Daniel Code number. It's really been trying to get to the Fibonacci number, and it set off another time sell signal. For those of you that don't already know, Fibonacci was a Greek mathematician in about 1200 and something AD, and in those days they didn't have freezers, they didn't have supermarkets, and the principal source of protein for city dwelling, in fact country people as well, their equivalent of chicken was rabbit. A great delicacy. Those of you who've had rabbit, very tasty meat, and they used your rabbit breeder, Mr. Dex Wright, and he made, because rabbits were such a day-to-day issue, like a lot of people have chickens in their backyard today, not as many as used to. A time when everyone had some chickens in their backyard. But the dwellers in Athens back in Fibonacci's day had rabbits. And he made an in-joke, a mathematician's in-joke. For example, my daughter is doing her doctorate in psychology. And psychology students and lecturers, she's a lecturer as well, she wouldn't thank me for saying she's just a student, she's a lecturer and a student, they make in-jokes. She wears T-shirts, for example, with a bell curve on them that says, I'll meet you on the curve. And, that's a statistical measure much used in mathematics and psychology. And everyone who's sort of in the in-joke, that's why it's called an in-joke, they think it's hilarious. And that's the only one that made sense to me. There are a lot that are a whole lot more subtle that I don't really understand. Excuse me. So that was an in-joke. So then somebody found out about Fibonacci numbers and put them on a chart, and they were sort of like not far away, and they thought, wow, this is fabulous, I'll write a book about it. And then another 5 or 6 people wrote another book about it. And eventually someone picked it up and said, I'm going to program this and put it into trading programs, which is why you can see an awful lot of programs have Fibonacci numbers in them. Right in here, if you look at this Trade Navigator tool that I've highlighted for you, it says Fibonacci expansion. Of course, it's nothing of the sort, because Fibonacci is a complete and utter waste of time unless you're interested in the fecundity or the sexual habits of rabbits. I've converted that to be a Daniel code tool. But that's what Fibonacci number's about. So when you see 62.5 on a retracement, which is a valid Daniel code number, but it's the alternate number to the main number, then think immediately they've tried to park this close to a fib number, and it's almost certainly a fake. So, Tom, I've just highlighted for you here. I put a black arrow on every time you got target recognition. And what I want to talk to you about to start with today is target recognition, because target recognition is price. And on top of this, you can overlay time signals. And what we say is when you have what we call a known cycle for time and a known price level. These are all Daniel code numbers. You can't get these anywhere else, and they're most certainly not fib numbers. When you have a known Daniel code time cycle and a known Daniel code price level, that's when we say time and price is squared. And when time and price is squared, a turn is almost inevitable. And what I've put on here for you, all these black diamonds, are places that you got price recognition. And let me take you through this so you understand it, because I've talked about it in general terms before, but not a whole lot of it's gone in. And excuse me, Chase, as I light one up and try and grab a swig of coffee as we're going. You guys are probably drinking whiskey or something a whole lot more interesting. So then we got this bar down here, and we start off coming down after the sell signal. This is Wednesday, March the 8th. Target recognition is valid at a bar, high, low, or on the close. Look at that light grey bar just above the chart graphic. And it gives you the open, high, low, close. The close is 51.24. Cast your eye to the right and you can see the Daniel code blue line at 51.20. That's a variance of 4 ticks. Now, in a number 51.20, because this market trades in 2 decimal points, there are 5,120 ticks available. There are 5,120 ticks to make up the price of 51.20, $51.20. So you have a variance of just 4 ticks out of 5,000 odd. Show you how accurate this stuff is. And that market closes right on that number. What it is saying to you, the market is saying to you, I know these numbers and I'm tracking them. And I know that's hard to believe, and it's equally hard to believe. The other thing I tell my students, markets are trying to talk to you every day. They're trying to tell you what they're doing. The problem is you don't speak the market, the language of markets, unless you've done a tutorial, so you don't understand what they're saying. But that's what this market's saying. I know these numbers and I'm tracking them. Down it goes. Doesn't give us much the next day. Next day, the low is 49.26 against the Daniel code number at 49.32. That's good. It's still tracking them. Another bar. This bar down here. This bar gives you a low at 48.20 against the Daniel code blue line at 48.21. Now, Tom, I'm only showing you the blue lines from here on. Of course, the charts also have retracements on them if they're trading within a previous range. I'm just showing you simply how important these blue lines are to your trading, because you don't get this from any other program that I have ever seen. And it is extraordinary. You will not get a turn on a market unless you have recognition of a Daniel code target. If you don't believe me, go to the Daniel code website. And you'll see there's a link there. It's called Chart Archives. It takes a while to open because there's about 34,000 charts in there, which I have published on the website since 2008. And you will be hard put to find a market that has ever turned anywhere except at a Daniel code number. So if I tell you that, if that is the number one thing that causes market turns, you should all be raging to get these numbers. And a lot of you are not. Deck's on the Chianti. God bless the Italians. Quite right, Deck. My son's over in Rome at the moment. He's discovered Chianti. Says it's pretty good. Yeah, wonderful. Okay, but look at this bar here. This is a bar that's made its low 48.20. Just look across. Daniel code numbers 48.21. That's target recognition. That's so precise. It's got this little black triangle on it, and it also gave a time buy signal. Up it went 2 days, and you got another time sell signal, ran it down. Okay, then here, it all gets a bit scruffy for a few days through here. You don't really know what the market's doing, and then it makes it clear. We're now up to 03.23. Look at the close. 48.26, the Daniel code numbers, 48.21. 5 ticks out of 4,800 possible. That's about point, I don't know, 001, 002. Very, very accurate. And it's going to set up a signal. Next day, opens on the Daniel code number, little rally that fails. Next day, outside bar, looks a bit funky. Look where the close is. 48.30 against 48.21. Again, it's saying, I know these numbers and I'm tracking them, and that sets up a buy signal. Off this market goes, tracks it like, have a look. Look for yourself, this high, 49.29 against 49.32, the Daniel code number. What's it do the next day? Just goes up to the next Daniel code number. The 50.10 is the high, the DC number's 50.09, 1 tick variance. The market is saying, I know these numbers and I'm tracking them. Next one up, 51.29 is the high, 51.20 the DC number. 2 later, what's the low of this bar? 51.20. Where's the DC number? 51.20. It's telling you all the time, I know these numbers and I'm tracking them. Up it goes until it gets to 04.11, and the high here is 53.84. Look to the right, what's the Daniel code number there? 53.85. 1 tick variance. That sets up a price sell signal, probably a blue line sell signal. I don't remember offhand now, but that's the first element of a blue line sell signal, as well as all the other signals, because when time and price are squared, a turn is almost inevitable. Okay, and then you get the sell signal the next day. It's not elected the next day. Inside bars are null or void. They're the way the market wastes time. When the market, all markets have an internal clock. When it gets ahead of its own internal time cycle, it puts in inside bars to waste time to get back to its proper time cycle. That's what inside bars are, almost exclusively. There are other forms of inside bars, but that's the predominant feature of inside bars. It's like running on the spot or marching on the spot. There's activity, but there's no momentum. The market is waiting to catch up to time. It's ahead of its time cycle. So we treat inside bars as a null or a void, and we carry forward the last valid signal, which was a time sell signal, probably a price signal as well, Tom, and down it goes and down it goes. You get the idea. It gets through here. We get a little tiny buy signal here. Look at this for target recognition. This is all waffly stuff through here. This means nothing, these bars. Look at this bar. 48.21 is the Daniel code number. This low's at 48.20. That means something. And we have a time buy signal, and we have to buy the market, and we're long. Now, none of these signals tell you anything about quantum, but if you are understanding of trend and the ways we can measure trend, which is before anyone else can see it, moves with the trend have much, much higher probability of rewarding you. But basically, when we're trading time, we take every signal regardless. In this case, it goes up, and look where it closes. Close of this bar is 49.33, the Daniel code number 49.32, 1 tick variance. Tom, this is the start of your sell signal you asked about. That's target recognition, and it's also a time sell signal, which is elected the next day, and down it goes for some part of $4,400 odd, depending where you got out. This bar here, for those of you who are really interested in trading this stuff, the close was 45.52 against a Daniel code number of 45.56. That's 4 ticks variance in potential 4,500 odd ticks. The market is saying, I know these numbers and I'm tracking them. And that set up the blue line signal for the next day. Okay, John in Coffs Harbour, if you're with us today, we talked about this a couple of weeks ago. When you see the market hit a blue line or any of the other Daniel Code lines, I told you this is a simplified version of the members charts. This market made its low at 43.76 against a blue line at 43.68. Okay, that's 8 ticks variance. Well, there's 4,300 available. That's 0.002%. It's incredibly accurate, and it starts to make a key reversal bar. Tighten your stops. Okay, whenever you get into these big ranging bars, you need to tighten your stops. You can even use a trailing stop if you want to. And this set up the blue line buy, which is why this market is now, it was also a time buy as well as a blue line trade. It was posted for 0505. The signal from 0504 set it all up, and now this market is up a considerable amount of money. Now, this is all taking me a lot longer than I thought it would, but I wanted to show you, and I'll have to be brief with this, folks. This is another chart. This is the Aussie US dollar chart, and I wanted to show you exactly the same thing on this chart. This market had a sell signal up here on 0223. Down it goes. Look at this target recognition you get. This market closed this day 75.27. DC blue line 75.26. Almost perfect target recognition. Next day, this low 74.91. What's the DC number? Look to the left of the chart. 74.91. Zero variance. We get that a lot, and you really have to ask yourself the question, how is this possible? Why is this so? When you see how often, in fact all the time, that markets are hitting these numbers so accurately, including many that are 0, 1, 2, 3, 4 tick variance, you have to ask yourself, why does this happen? How does this happen? What is it that makes these numbers so accurate? It's because they're taken from the price chart itself. It's the charts that create these numbers. It's the market DNA. I don't know if I'm getting that through to you, but you should all be jumping up and down and screaming in excitement by now. Okay, so that set up probably a blue line buy, but certainly it was a time buy, and off this market goes. It gets all the way up here. Okay, it's not showing us much. It's not showing us much. Then it puts in this little inside bar, which is a null. But look where the high is, 75.79. Where's the Daniel Code number? 75.77 and 75.80. It's telling us, I know these numbers and I'm tracking them. Next bar up looks pretty good to me. It's got a high of 77.19 against the DC blue line at 77.17. Next bar, it does an inside bar. That wasn't close enough. It's saying, I'll put in a high at 77.16. And the next bar, it says, I'm putting in a high at 77.18. So it's put up 3 bars within 3 ticks of this number of 77.17. So you know this market's tracking these numbers. Here's the high. The high, 77.48. What's the DC blue line? 77.48. Zero variance. Now, you don't need zero variance to get target recognition, but I'm just highlighting to you how often this happens. This is a frequent occurrence. And it sets up a DC time cycle signal. And down it goes. We get target recognition here and a little time buy signal. Up it goes. Target recognition here, 76.75. The high is 76.75. Zero variance. Another sell signal, Tom. Down it goes. Look what happens down here. It all looks a bit fruity through here. Now it starts tracking the numbers. This low 75.32 against the DC number let me bring this away here so I can see 75.32. The number's 75.30 on the right-hand side of your screen. 2 ticks variance. Next bar, where does it close? Number we're looking for, next one down, 74.96. This closes 74.97. This market is saying, I know these numbers and I'm tracking them. Little reverse bar here, funny little outside bar here, but look where it closes. 74.98. What's the number? 74.98. 96, 2 ticks away. That sets up your buy signal and your time buy, and up it goes. And Tom, I don't know if you guys trade currencies, but all markets do this. It just happens to be an example that I had. All markets do this. It's exactly the same. Some markets are a little bit more accurate than others, but basically all markets will track these Daniel code numbers like this, like, you know, dogs after a bone. It's incredible. Here's the high, 76.11. What's the Daniel code number? Look on the left-hand side, 76.12. This is an old Daniel code number. This is a number to measure the downside. So the market, having gone through it and used it once before, it's now going to test it from the other side. It does this all the time. 76.11 is the high of this bar. The old blue line, 76.12, sets up a time sell signal, and down it goes. Same thing down here. Look where this market closes and where the low is. The low, 74.92 against the low. Look to your left-hand side, 74.91. What's the close? 74.97. Look at the other Daniel code number in that same sequence on the right-hand side, 74.96, 1 tick variance. Okay, I hope you're getting the idea. Then you get this gap up here. This is Monday morning. There was obviously some news on the weekend. The market goes whoosho, gaps up. It opens at 75.85. That's only 5 ticks away from the old Daniel code number at 75.8. And it sets up a time still sell signal, and down it goes. Hits this low here. Look at this low. This low is 74.40. Look at the Daniel code numbers, left-hand side, 74.40. 100% target recognition. Up this goes. Okay. Here's the close of this bar, 75.26. Look at the number on the left-hand side, 75.26. That sets up the next sell signal. That's target recognition. It's the first thing you need for any buy or sell signal. Any turn. Turns will only come at Daniel code numbers. Now, those of you who are members, you've had all these numbers before. They should be on your charts. And that next day gives us nothing, but the signal's already been given. There's a time sell signal setting up. There's a price signal setting up. And the next day, time matures. You had price recognition on the previous bar, and down it goes. Same old, same old. I won't waste any more of your time until you got down to Tuesday of this week, and there's your low at 73.30, and there's a DC blue line at 73.28. In fact, this earlier bar here, the black bar of 0504 and the red bar with the low at 73.78, 73.78 against the red line 73.81. That's a 3-tick variance. That set up the signal. Then you had a break lower, hit the blue line, and you got a buy signal. It's not been elected yet. Inside bar, wasting a bit of time. Key reversal bar today, and looks like this will be up for a few days. Okay, let me let me see what we're doing here. Michael Pell, how far ahead of time does one get these time signals? Well, if you want to put them all on the chart, into infinity, Michael. Once you start the time cycles, they just run on and on. Michael Peel, pronounced like, if I said this wrong, Michael, I don't know if this box is big enough for me to see what you've written here. Let me see if I make it bigger. Pronounce like aura. I don't quite know what that means. Infinite, go on and on forever, the time signals. Albert, I've searched your website, cannot find description cost of your new time method trading. It's not on the website, Albert. The website only gives you trading of price. The TO3 signals have an element of time in them, but they're not pure time signals. This is what I teach you at tutorials. But all of these blue lines and red lines are on the members' charts. You won't find trading time on the website. It's what I teach you at tutorials. Okay, so let's move on. We've done those two. The important thing now is to have a look at the equities in the remaining time that we have. And let's start right here. And here we are, folks. Those of you who come to these webinars regularly know that we said this market would be at 23.93 at the end of May. We haven't got the end of May yet, but bear in mind this is a 24-day chart. Every one of these bars is 24 days of trading. Where's the market? Close on Monday was 23.99. Close today 23.94. Those of you who follow us all the time will know that we gave you these prices 10 days before Goldman Sachs came out with the same prices. They called it 2,400. And then the whole of the world followed, of course, after Goldman Sachs say something. The whole world follows. But you got it 10 days earlier at a Daniel Code webinar, which they're all on the website. You can go through them and find out for yourselves. So where are we? We're at a high, very close to a high. There's a big lot of kerfuffle about the VIX. I don't know if I have a page for you here. I may not. Here we are. I wanted to show you this. This is for you gold buffs. One of you wanted an analysis of the Huey. I'll show you that in a moment. Look at this gold-silver ratio. For those of you who understand these markets, silver is, this is the ratio between gold and silver. It's all the way back to mid-2016 levels. This is something I was going to talk to you about, the Australian budget. Clearly, we don't have time for that. Okay, let's have a look at the other things here of interest with these equities. Remember, sell in May and go away. Seasonally, we're expecting this market to be weaker. Here is the this is the S&P index. Same chart you saw. Here's the 2009 low. I have to scrunch this a bit. How incredible that this market has run the whole of its bull run inside a Daniel Code trading channel. Okay, we've had one close outside the Daniel Code trading channel, and that was February 2016. Look where this market is now. It's recovered the median, which means it's stronger, and it's having real trouble at this 2400 resistance. This is the 6-day chart. Let's have a look what these other ones are doing. The Dow is the strongest of these markets. This is the Dow, and let's have a look at the Russell. This is the small caps. Let me crunch this up a bit. That's too much. It goes a bit crazy with that. This market is trying to recover the median. So in terms of relative strength, I know everyone thinks it's a lot weaker than the S&P. It's not much weaker. It's holding the median. That's good. Okay, so what's going to cause a pullback in these markets? Well, seasonality is now starting in favor of a pullback. Those of you who saw Frank's article on the fourth seal, the Nasdaq is in a position of being vulnerable. It has time and price. Boy, look at this. This is what you don't see very often. This is worth seeing. Here's your low. This is the, let's have a look where we are. Here's the low. This is your 2009 low back here. This is the start of the bull market. This is a valid DC trading channel. This is what Frank was talking about. This is up at 3 standard deviations from the mean. Okay, they don't stay there very often. This market is very, very, very overbought. And don't forget the 4 or 5 big stocks, you know, the Amazon, Alphabet, Microsoft, those huge Facebook stocks. They now account for 4 or 5 stocks account for over 12% of the value in the S&P. So just watch what happens with those. They're going to be the weaker versions of them are going to be the bellwethers, and you're seeing that happen already. Snap has given up almost all of its massive IPO, might even ring the top, I don't know, but massive IPO went nuts. They valued at $17. It came on the boards $24, $25, and just kept going. So it gave all of that up today. It's back near its opening price. Okay, lots of fun. Tesla is the one to keep an eye on. It's a really interesting story. It's viable simply because of all the tax credits that it collects, or that Mr. Musk collects. It's an exercise in something very, very clever that may not be sustainable. So I'd keep a close eye on that, you folks who are interested in stocks. But the most important thing is follow the Daniel Code signals. You can't trade 6-day bars or 12-day bars. The risk is too big. Your stop's too far away from your entry. So you need a daily signal to pull you into the trade. And times like this, when things can be getting a bit nervy very quickly and without much notice, you need to really be on top of following the daily signals and seeing what they develop into. The big drama today is the VIX. For those of you, the VIX is what they call the fear index, and this is the VIX. It's the market volatility index. This is all slightly screwed because look at this drama back here in 2008. It's off the page. Let's move this out a bit, and this is called the fear index. This is the 6-day chart. And this is called the fear index because when there's fear around, which is associated with the market going down, then this index goes up. People are buying protection. Hedge funds and institutional investors are buying protection in the VIX. Now, you can't trade the VIX with futures. This is the index. You can trade it with options, and there are also ETFs, which is what they all seem to be piling into. ETFs are the now popular default because they're simple. They act and they trade like a stock, entry and exit like a stock. And the VIX ETF is just seeing massive, massive, massive inflows with people buying protection. They're buying calls on the VIX. So if the VIX goes up, the implication is the market's going down. So they're trying to protect their stock holdings with hedges in the VIX. But look at the VIX. If this market's at an all-time high, have a look where the VIX is. The VIX is at an all-time low. There's no fear in this market at all if you go on the traditional indicator, which is the VIX. The point I'm trying to make to you is that traditional indicators may no longer be much good because the market scenery has changed so much. The growth of ETFs alone can dramatically change how these indicators work. So don't be lulled by this. I think markets are in a vulnerable position. I don't like the disconnect between the NASDAQ and the other indices. The other indices are sitting around their median. The NASDAQ's up at 3 standard deviations on one interpretation. There are others. I can draw you a Daniel Code trading channel where it's not at 3 standard deviations, but that's the default setting. And I think that that's a recipe for a problem. As well as that, we're moving into May. Get your antennae up. And make sure that you don't miss the move to the downside. If it does come, and when it does come, it will look like nothing. It will just be quiet, and calm, and orderly. And by the time it bites, it'll be too late. So don't be in that position. To exercise what I mean, let me show you what happened to the 2007 top. Here it is. This was on a Daniel Code 59 cycle. This was the crash cycle. Nothing happened. Look, pullback, little rally, nothing. Hasn't taken out the old lows. They're over here. Okay, then it took out the old lows. Little rally. This is all still right. This is still just a correction according to everyone else. Boom. And when it lets go, it's too late. So make sure you're up to date with your Daniel Code charts. Make sure you're following the price signals Also keep looking at the TO3 and blue line signals. They will get you into the right side of the trade. And I hope today I've shown you something about time that you haven't seen before. If you are really interested in learning that, please email me, jneedham@thedanielcode.com, and I will be happy to talk to you and teach you how to trade, how to create and trade time signals. So Albert, they're not in the website. It's what I teach at tutorials. Michael, I've answered your questions there. How far ahead do these signals go? Infinity. They'll be on your chart once you have the right tool and the right time cycles. Akshay, Nifty, large part be moving sideways, break the high. Using got stopped out twice to the basis. However, both cases the index didn't take out the stop, correct to ignore the basis and only focus on the index high, low plus the buffer to determine the stop. Don't know offhand, Akshay, but shoot me that comment, please, in an email, and I will reply to you with a nifty chart. Okay, who else have I missed here? Adrian, we've got. Michael, are these time signals provided by Trade Navigator DC software? They're not provided by Trade Navigator. They're provided by DC software, Michael. AAPI, yeah. Apple, yeah. Apple, absolutely crazy. Anyway, there we are, folks. I think I've answered all your questions. If I haven't, please shoot me an email. One of the things I haven't done, Kurt, is I haven't got around to giving you an analysis of the Huey. Here's the weekly chart of gold. Wow, look, we all just had to update it. This number's been on your weekly chart for months and months. 1297.4. What's the high? This is a weekly chart. 1297.4. Zero variance. Same thing. You saw when I opened this chart, we hadn't updated it. The number was back over here in about March. I've just updated it for you. Look at it. Okay, turned exactly at the number. We can do exactly the same, Kurt, on the Huey. All the Huey runs exactly on these Daniel code numbers. But I will... if you've got a specific question, shoot me an email, please, and I will make the Huey the priority at the next webinar. Kurt, I apologize for not doing the analysis. You did ask me to do it, but I had got tied up with TomTom stuff on oil, which I love to show you. And so, Tom, there you are. You're a wealth manager. None of your clients are using the Daniel code. Talk to me about, we'll do a seminar for all your clients and teach them how to make real money. I know you don't like that because brokers hate trade wealth managers. Anyone who's got a client hates exposing them to anyone else, but you'll never see results like you get with the Daniel code from anything else. I haven't seen it anyway, and that's not a boastful comment. That's just my experience after 30 years of trading and 20-odd years trying to find the Daniel code. Okay, that's it for today, guys. Great to have you with us. I've got the last of the quotes. There we are. Good, good. Okay, Adrian, I'm going to be talking to you soon when you start your tutorial. Deck's enjoying this. Bloody Mary by the pool. Yeah, that time of day, Deck. It's autumn here, but it's still beautiful here in autumn. It just gets a little bit too hot in summer the rest of the year at the Gold Coast. It is paradise. Okay, thanks for being with us, folks. I'll look forward to having your company at the next webinar. Bye-bye for now.